Hi everyone, this is Ozzy Martinez with Financial Flight Plan, and today we'll be helping you develop a solid foundation around saving and investing and why it's important. Um, so the information that we'll be going over today has been provided by Cash Course. So if you haven't already created your free account with them through your student Oregon email, go ahead and do so. There's all kinds of invaluable information and resources surrounding everything that's personal finance. And so that being said, there is going to be a lot of jam-packed content on this presentation, so we'll be breaking it up into three parts. So first we'll be kind of focusing on saving, and then the next part will be investing, and then to wrap up, we'll kind of go over retirement planning and additional resources. So without further ado, we'll get into saving and investing. And so really, as you switch your focus from finishing your education to achieving the goals that you've set for yourself, it's time to start thinking about saving and investing and get started on it. And really, you do need to do both because they complement each other. So your savings are really important because they're gonna be what helps you kind of weather the storm that is the ups and downs of investing while you're giving your investment money time to grow in the stock market. So, you know, your savings are what you're going to fall back on in any scenario. So you really need that cash on hand in a safe, secure spot. So, you know, you'd never know what's around the corner. So just having around 3 to 6 months of expenses saved up is going to help you in any scenario. So, um, that's where the value comes from is there's that practical advantage of being able to be prepared for any emergency, as well as being able to stretch your budget without any kind of strain on your financial health. And so you know um, the difference between what you earn and what you spend each month is the amount that you have available to save. And the more you can increase that difference by earning more and spending less, the more you can save. So really that's the only way to build wealth is to increase that gap however you can. Hopefully you're doing both, the earning more and spending less. And so that way, yeah, you have a lot more flexibility with your plans for the future. Whether you want to take investing slow or it's just having more savings just means you can be a lot more comfortable and flexible with your plan and your lifestyle. Um, so when it comes to where to save, there's simple and convenient ways to save, which is through your bank and credit union savings accounts. However, these rates are going to be low. However, they will be guaranteed. So, with savings accounts, they are insured by the FDIC, the Federal Deposit Insurance Corporation. So, that you're going to get this guaranteed rate. Your savings are insured. However, it's just going to be really low. So, the average interest rate on savings accounts, which is provided by the FDIC, is 0.9%. So, just a little under 1% interest that you would be earning. So not very high, especially when you consider that the average inflation rate per year is around 3%. So um, then there are other savings accounts where you can earn a slightly higher return, but where your principal is still safe. So that's going to be money market accounts, certificates of deposit, U.S. Treasury bills. So money market accounts tend to pay interest at a somewhat higher rate than basic savings accounts, but they may charge fees if your balance falls below a set minimum. CDs are term deposits with maturities from 6 months to 5 years that pay interest at rates at least as high and sometimes higher than money market accounts. Then we have U.S. Treasury bills, T-bills, which you can buy online with an easy to open Treasury direct account. These pay a fixed rate of interest that's set when you buy, and they're available with terms of 4, 13, 26, or 52 weeks. So, all are great options when it comes to saving. Like I said, your principal is going to be relatively safe. However, you will be getting a slightly higher return. So they're just moderate ways to kind of kind of invest, because you're saving, but you're also looking to kind of get a high earning. Um, and so that kind of brings up the um, the topic of liquidity, liquid assets. So liquidity describes how easily an investment can be converted to cash without loss in value. Cash itself, cold hard cash, that's going to be totally liquid, whether it's in your hand or in a checking or savings account. If you look at CDs and T-bills, treasury bills, they're a little less liquid because they have those maturity dates at when the full value of the interest is paid to you. However, you can't really have access to that money until the maturity date unless you pay a fee or some kind of penalty. There's going to be some cost associated with getting that money back before the maturity date. So I mean, liquidity is appealing, just to be able to have that money readily available. But if you keep all your money in liquid accounts for the long term, especially, you actually risk losing your buying power, because, like I said, if you're not getting at least that 3% return to compete with inflation, you're losing buying power. Your money is getting eaten up by that inflation. So um, yeah, liquid investments tend to just pay interest rate at a lower rate than inflation. So not quite going to outpace that. And so the result is that it's more difficult to reach your goals within a reasonable time frame. So in addition to saving, you need to invest to make your money grow. So there's this little liquidity scale where obviously the most liquid is going to be currency, checkable deposits. Then, you know, then you have your savings and time deposits, which are a bit more liquid, more accessible. Treasury bills are also pretty liquid. However, they're going to be less liquid than savings because you have to either wait for the maturity date or take a little bit of a hit on your initial principal. Bonds and stocks, right? Equities, stocks. Um, There's going to be less liquid because sometimes the prices, the values fluctuate so often that you may end up losing money or what have you. And so, yeah, it just further up the scale is going to be like your house, commercial real estate, stuff that's just really hard to move to find a buyer for, to be able to convert those assets into cash. So yeah, that's what you got to kind of think about when you're considering ways to save money. So that's going to conclude the savings portion.